Stock is 215. Earnings after the close today. What is the expected move here, guys? Okay, right about 17 bucks. Kind of easy to figure, about 17 and a half actually. Okay, so that puts us at 197.50 up to 232.50. Nice round numbers to work with here. Okay, let's bring in a chart here. Okay. 197.50, there's no kind of support there at all. Same with 232.50, I'd say there's really no resistance. It is just, you got the 50-day up here, so really no technical support or resistance. And in terms of direction, I don't see much here either, quite frankly. Anybody else see something? Okay, Michael says down. Can't really argue with that. Vol is expensive. Let's take a look here, though. Okay. So if we go right to those 197.5, 232.5 areas here, let's look at an iron condor right around those spots. Better than what we have seen recently. Okay, still not 2.5, which ideally we'd love to see, but this is still way better, and it's very wide market, but still way better than what we have seen recently. So let's just put this up here. Okay, which gives us break-evens of 197.75 up to 232.25. So, right there. Reward to risk a little bit light. We'd obviously like to see that closer to $2.50 for 1-to-1, but this is not bad. This is not bad at all. Now let's see what happens if we tighten this up instead of a $5 wide. go to a $2.50 wide, and well, I know Muller's just started speaking, so we'll have to see what the market does with this right now. Okay, this is a $2 wide iron condor. So roughly about the same reward to risk. However, the break-evens are not as good. So for about the same reward to risk, I'd much rather do the $5 wide iron condor because it gives me a better break-even. Now, if I could get closer to 125, you know, now we're talking a little bit different, perhaps. Okay, let's look quickly at a strangle swap here. That thing is really super wide and is going to be very difficult to trade on. So I'm going to suggest that that's not even something we would even put out there. Okay, what I would look at though is a put calendar. I definitely would look at a put calendar here. You know, if this thing, it is hovering right at that 200-day moving average, and it's going to move from there. And I would say, if anything, I'm biased towards the bearish side here. That's going to cost probably around 65 cents. And wow, does that look good. All right, so what I want to do when I say it looks good here, guys, you can see I'm looking right down here. Okay, right at that expected move area right here. And if this thing costs 65, even 70 cents, that's way better than 1-to-1. All right, so what I want to do here, guys, I'm gonna keep looking at this. I'm gonna tweak the strikes a little bit here, see if maybe 200, 195. I'll put a comparison up here. When I get done with that, I'll come back. We can compare them all together. Okay? Any questions, guys?